Euro USD analysis for Saturday the 18th of October. Of course the markets are closed, it's a Saturday, but let's just take a quick look at where we are and what happened yesterday. So as we can see on the daily, we are bullish. We've had a break of market structure here. After that we are in the pullback. The pullback internally is bearish. As we can see, we're making lower lows and lower highs. This is a lower low. From here we've had a bit of a bounce. We had 3 straight days of very bullish momentum. Then we came into this daily supply, and from there, as you can see, we wicked it and we've kind of come down. Now as far as the daily is concerned, we would expect this pullback to get over. Typically what I look at is, are we in the premium or in the discount? So as we can see over here, we are already we've reached about 70% of this. So the pullback, to me, at least as far as the levels are concerned, seems to be over. However, we'll have confirmation only if I see a change of character where we take out this. That's number one. And if we take out, if there is an internal break of structure. So for example, we're currently bearish, but if we take out this high, then we become bullish, and then I can say with more confidence that the internal has also turned bullish. However, that's just interpretation. The markets don't have to do whatever you think they're doing. But yeah, that's how I look at it. So again, to recall, the daily is bullish. We are right now in the pullback phase. The pullback is obviously bearish. We've come into a daily supply zone, and from there we expect some kind of a reaction, and I would expect this to continue until it doesn't. Now that's as far as the daily is concerned. Moving on to the 4-hour time frame, we can see that the 4-hour is bearish. Why? Because this is the daily pullback that is happening. So you had a break of structure. After the break of structure, we can expect the price to pull up. So we pulled up to quite a bit. We are in the premium part of this pullback. If we just use the fib tool to measure where we are, we can see that we've pulled up quite a bit, and we can now expect the price to continue moving, continuing the bearish trend. So that's what seems to have happened. We came into this daily supply zone, and on top of the daily supply zone we have a refined 4-hour zone, but the price didn't really go there. We just kind of come here, and now we're coming down. Of course, for me to say that the pullback is over and we're ready to continue down, the bare minimum that I would like to see is change of character. So if we take out this low, that'll imply a change of character, and if we take out this candle's low, that would imply internal break of structure. So for me, I would consider the H4 to turn bearish and continue bearish, indicating that the pullback is over is when I see a change of character and the break of this. So that's where we are. All the trades that I take are on the M15 and thereafter on the M5. So let's just break this down. So yesterday, if you recall, we mentioned that the M15 is bullish. We've had a break of structure here. Why is the M15 bullish? Because we're playing the H4 pullback. Yeah. So this is bullish, and we said that we've had quite an extended kind of a run, and we were expecting some kind of a pullback to happen. I think when I put up my analysis yesterday, we were somewhere here, 7 o'clock or 7 thereabouts in the morning, and what I had mentioned was that as a bare minimum I need to see a change of character, and after the change of character I want to see an internal break of structure. So for me, if you look at this, I want to see a candle, not just wick, but a candle close. So that happened at this point, as you can see this. So after this, I would look at some kind of a supply zone which has actually caused this to be removed. So I would have looked at this candle here, and as soon as price came in here, if you wanted to trade on the M15, you would have probably just kind of done this, maybe a stop loss over here. And then, like I said, you need to look at strategic targets. I would look at probably coming down up to these levels and then kind of building up. So this would have been like a almost 1:5 kind of a trade. Let's say you missed out on this. There were other opportunities too, because now I expect the price to kind of continue going down. I would have typically come down to the M5 and then looked at, okay, so price has kind of come up here. And then maybe, now it's continuing to go further down. Now again, wherever we have some kind of major breaks happening, I would again look at those as probably zones from where I could again take some trades. So for example, here I would look at probably this as another zone, and once kind of price kind of comes up here, I would have put another trade here, a short somewhere here, and do a 1:2 or a strategic kind of a thing. So yeah, that's how I would have traded this. And yeah, so going forward, come Monday, what is the expectation? Well, the expectation is again coming down to the M15. I would expect the pullback, I think, has started for me, and I would expect the price to come down. Look for shorts till we at least come to these levels or this level, or maybe even up to this level. So for me, I would look at shorts. Any candle or any supply zone that leads to a significant break. So for example, we got a break over here. Is this a strong zone or not? So if you look at, probably let's say this was a demand here and price came in here, we got a bit of a bounce, and from there we've kind of broken this structure, and probably we go on to break this too. So in that case, I would look at probably this candle as a strong supply zone, because this is the one that caused the movement down. And if you look at this, this is probably mitigated by this one, and then probably by this one. So maybe, this entire area is what I would look at. So once price kind of comes up to this zone, maybe somewhere here, I would again then look for some kind of a shorting opportunity from here. So that's going to be my outlook, and continue till probably up to these levels. That's what I would be looking at. That's it for now. The markets don't have to agree with whatever I'm saying, and you need to be reactive and not just be married to your own ideas. And I hope the markets remain with you. All the best.